The United States government just moved $288 million of seized Bitcoin and Ether to Coinbase Prime. Every other time this happened, the internet screamed dump incoming. Today, the market pumped 2.4%, straight through the news. In this video I'll show you how government selling actually works, what happened the last two times a government dumped billions, and the two numbers that tell you whether this market just passed its stress test. First, the mechanism, because most people have this wrong. Governments don't buy Bitcoin. They seize it, darknet cases, hacks, fraud. Those coins sit in cold wallets, sometimes for years, until a court clears them for sale. When you see coins move from a government wallet to an exchange like Coinbase Prime, that's the tell that a sale has been approved and is being prepared. So the transfer itself is the news. The market prices the selling before it happens. That's why these headlines hit so hard, and why the reaction to them tells you so much. Now, today's tape. The transfer, $288 million. The reaction, Bitcoin up 2.4% to 65,190. Ethereum up over 6%. Total market up 2%. Think about what that means. The single most feared seller on the planet showed its hand, and the order books ate it without slipping. A market that absorbs bad news is telling you where the real pressure is. And right now, the pressure is from buyers. But don't take one day's word for it. History, Case 1. Summer 2024, the German government sold roughly 50,000 Bitcoin, about $3 billion, in a single month. The chart at the time looked ugly, price ground down into the low 50,000s, sentiment collapsed, everyone tracked the government wallet like a doomsday clock. Here's the part people forget, the price bottomed while Germany was still selling. And within weeks of the last coin going out, Bitcoin had ripped all the way back. The overhang was real. It was also finite. When it ended, the spring released. Case 2, older but bigger lesson. 2014, the US Marshals auctioned nearly 30,000 Bitcoin seized from Silk Road. A venture capitalist named Tim Draper bought most of it, around $600 a coin. The government sold mechanically, at whatever the market would pay. The buyers who took the other side of government selling made some of the best trades in the asset's history. Government sellers are price insensitive. They don't wait for a better price. Which means they hand cheap coins to whoever has conviction. That's the pattern. Now the bear case, because there is one, and it's fair. First, 288 million is small. Daily Bitcoin volume is in the tens of billions, so absorbing this proves less than it seems. Second, and more serious, the US government still holds roughly 200,000 Bitcoin. If this transfer is the first drip of a full liquidation, the overhang is 40 times bigger than today's move. And third, the macro backdrop is not clean. US strikes on Iran are into their fourth day. Yesterday's soft CPI got most of its help from falling oil, which a wider war would reverse. All of that is true. Which is why you don't argue, you define the test. Here is the test, on the record. 2 conditions. 1. ETF daily flows stay net positive while these transfers continue. Institutions keep buying through the fear, or they don't. 2. Bitcoin holds above 62,400. That's last week's panic low, the line the market defended during the missile night. Both hold, the absorption is real, and dips into government selling are gifts. Either breaks, the overhang thesis wins, and I will say so, in a video, on this channel. That's the deal here. Falsifiable calls, not vibes. So here's the takeaway. Government transfers are the loudest, most legible fear in crypto, and history says they mark accumulation zones more often than tops, because the selling is finite and the fear is not. Sellers make headlines. Buyers make bottoms. Subscribe, the 2 numbers from today's test get tracked here daily, and when the verdict comes in, you'll hear it first. Not financial advice. Do your own research.